Everyone, welcome back to Yassin Innovations channel. This is the channel whereby you're going to get all notifications on the financial literacy education, creativity, and innovation. So today I'm taking you to banks. So did you know why banks encourages bank overdrafts? And first of all, you have to know what a bank overdraft is. So a bank overdraft is whereby a bank allows you to withdraw cash beyond your beyond your savings. For example, you may be having maybe $10,000 in your account, and then you manages to withdraw maybe $20,000 from your account. So a bank can allow you. So did you know why it allows you to overdraft? I know you never knew. Stay tuned. Don't forget to subscribe to my YouTube channel, Yes Innovations. Smash the like button there to make the videos more discoverable on the YouTube. Please subscribe and share with friends and family members also to get the benefits that you're getting from the videos here. Welcome. So what I mean by bank overdrafts is whereby a bank can allow you to withdraw money from a bank account whereby your account rates zero. A bank can allow you to withdraw cash from a bank account where the bank account rates zero balance. Is it possible? It's very much possible. So banks encourages bank overdrafts for the people that they know they have been saving with the bank for long, because there is no big security between the bank and you, because or the bank and the bank account holder. So the security with the security with the bank holder, the bank and this account holder is not there. But the goodwill that you have with the bank, that is you have been saving with the bank for long, so the bank knows uh, how secure they are to give you a bank overdraft, or to allow you to overdraft or to withdraw cash from the bank whereby there is zero or less savings in your account. So this tutorial is here to teach you why do banks allow bank overdrafts, and some of the advantages and disadvantages to an account holder to take a bank overdraft or to withdraw cash, which is not as much as your savings. So a bank can only can only allow bank overdrafts to bank account holders who have good history with the bank. That's the first thing. Banks do allow uh, bank overdrafts to only account holders who only have good history with the bank. For example, if you have not been saving with the bank, or for example, if you have not been saving with a bank, how do you expect a bank to allow you to over withdraw cash from your account, and you've not been saving with them for long? So if for example you are a new account holder, you cannot be allowed to have a bank overdraft or bank overdraft, definitely, because you are not you have not shown any good history in the bank, neither bad history, because the bank has not known you on the positive side of cash. So the bank has to know your history first. They know how much you save with them, they know how regularly you do save with them, and then they have to give you an option of doing a bank overdraft. So for example, if you are an irregular saver or depositor, definitely banks cannot allow you to make a bank overdraft, because this is a person that can leave anytime, okay, so banks do allow bank overdrafts to people who have set history. That is not everybody, but to account holders who have set good financial history with the bank. So for example, when are you allowed to withdraw amount which is less than your savings, or when are you allowed to overdraft? First of all, you have to inform the bank that you wish to overdraft. You don't just go to the counter and start doing you start withdrawing cash whereby you don't have any cash. You have to later You have to write a letter, and then you have to, there is management with the bank. You have to talk to the bank, and they have to allow you. So why do they allow you and this is not a loan? So because banks don't say that bank overdrafts is not a loan. So today I want to teach you why do banks encourages bank overdrafts and they say it's not a loan. To me, as per my view, according to my financial literacy, bank overdrafts are treated like loans, because once the bank gives a loan to to an account holder, they are treated as loans. Okay, this is an expense to the bank because these loans have been disbanded from the bank, as well as the bank overdraft. This cash has been disbanded from the bank. You see, you disburse this loan to an account holder, so the bank is negative on their side. So on the other side, the bank overdraft, this amount has been disbursed from the bank account of the bank to an account holder. You see, so this money has been treated the same way to banks, but to the account holder, they are in quotes, they are told these are charges, but they're never charges. These are interest. These are interest imposed to overdrafts. So banks do encourage bank overdrafts because themselves do treat uh, they do treat bank overdrafts same way as they treat loans. Therefore, loans do have much interest than overdrafts, but overdrafts have their own interests that are payable with not a fixed term like how loans are, because loans are paid with a fixed term like in installments and you pay within a period of time. But in overdrafts are not like loans, but their interests are covered once. Remember that their interests are covered once you deposit the account with the money. That's when they start deducting the cash that we withdraw plus the charges that they call the charges. That is the not charges, those are interest. So banks do benefit with interest much on drafts than charges themselves, because charges are the is the fee which is imposed to to a withdrawer when withdrawing cash from the account or using an automated teller machine. So these are charges or something. Okay, charges are meant for the withdrawers or something else, whereby you are catering for the service. That is. So remember, when you're withdrawing cash from a bank, it means that you want something back to your pocket, and this service that you are catering for or you are paying for is from the bank. You see, so these are charges, for example, when you're withdrawing cash or when you're doing other services with the bank. So but even loans when you are getting loans, there is charges apart from the interest that you pay later. But now look at the bank overdrafts. They allow these charges plus the withdrawal charges are there. You must be charged the withdrawal charges plus the charges of the overdrafts. So these charges of the overdrafts, the banks do want to treat them like the charges of the withdrawal, but not so, because they have a much percentage of interest. So these ones, we call them the interests. So bank overdrafts are the same as bank interests, but I mean bank overdrafts are the same as loans. It's only that the term the fixed term of the loans are different from the temporary way of payment of the bank overdrafts. So that's only the difference. But the payment, okay, but the interest is there. It's only that the interest of the loans is fixed, but the interest of the charges is not fixed. You see, it is temporary, and it is payable immediately when you start depositing cash to your bank account. That's all. So don't forget, banks do benefit with interest. Those are their major income or their way of getting cash back or getting revenue. So never be told that overdrafts are not interest. Those are interest. Those are interest. Those are interest. Total interest. I hope you've learned something from here. Be aware that bank overdrafts charges are said to be charges, but they are not charges. They are interest like loans. It's only the difference is they don't have fixed terms for payments. Don't forget to subscribe to my YouTube channel, Yassin Innovations channel. This is a channel whereby you're going to get all notifications on the financial literacy education, creativity, innovation, and investments. Until next time, say goodbye.